Righto, welcome to the blog for Tuesday, 21st of August. This is day 52 of 65 of the Compound Effect Challenge. Making forward progress every day, applying my edge and method, making sure all the little things get done every single day in moving forward, and it's making every single day, every single week count that ultimately brings those end of year goals into play. And that's certainly got to be the focus and getting all those little things done, and thinking about it and focusing on it obviously on a daily perspective as well. So as far as trading strategy, just having a look yesterday at these markets, and there's one particular area of the markets I was looking at, and I was having a think about the three strategies and just really confirming for myself, exactly, what I'm doing as far as my trading plan is concerned, and what it is three trades or three key areas or three strategies that I'm looking to trade, and they really suit my personality, my way of going, and I believe that I have most areas of the market covered. Where if there's any sort of move or any sort of significant move, in most cases I should be able to cover it. I know, for example, today there was a down move. I didn't have a trade, didn't didn't get an opportunity to get on that downtrend that we had, which I'll talk about soon. But looking back over it, normally either strategy one or strategy three would cover that sort of area. But I'll get more into detail as to why today I didn't get it. But that made me think about the strategies and knowing that what I've designed for myself covers most areas. So strategy one is just continuing a trend. It needs to be sort of mid-range. It's not near the highs or the lows, but it's bound or using key levels in the market and just continuing the trend, and that's sort of the basis of this trading strategy is key levels in the marketplace. Strategy two is a continuation from that, or basically looking for the continuation of that trend, but when it's up near the highs or the lows, and looking for it to push through and break out. And many times we'll see that the markets continue and break through. And there was an opportunity on the today. Unfortunately, just missed it by a tick, but it was a fantastic tradable area. And this is where I start to involve other markets, because all of a sudden, when you're dealing around the highs and the lows, it starts to become quite a different market, and you just need a little bit more perspective. And again, there was another region where it could have broken lower, where just the other didn't have the other market support, and I'll go through that. Whereas strategy one, same sort of area, but it's really mid-range, and I'm looking at it off key levels. So that's the emphasis. It's all about key levels, so there's no need for other markets. Whereas here, breaking the highs or lows is not necessarily always key levels there. I am looking at price action, but really need the other markets support to confirm, yep, we're going to take the entry. And then strategy three is mean reversion. It's basically the opposite to a breakout strategy, where every time the market comes back to its highs, or basically a trend starts to exhaust, there's just as good as opportunity as of breaking. For every time it can break, there's just a good opportunity that it's going to actually come back within the range and head back to where it came from, meaning mean reversion, staying within the range and coming back after quite an extended move. So when I look at that, I think, okay, any moves off key levels mid range, great. Then if it gets up to highs or lows, got that covered. Then also if it wants to come back within the range, got that covered as well. And then basically for each strategy, just got a couple of blueprints or a couple of ways of entering. Just doing a bit of reading lately, and they talk about all sorts of different things, especially a lot to do with exits. But they say, with exits, you should have multiple strategy approach. Whereas, you got one way to get out, but if that way doesn't happen, you still got a backup way or a couple of ways to kind of cover your bases. So for me, I just see it as this is the basic way of trading, or this is my strategy. Within each of those strategies, I've just got a couple of blueprints or a couple of setups that I'm specifically looking for. So if one doesn't get triggered, hopefully the other one behind it will pick up the slack, and and I'll be on most of the good moves that are within this market. So as far as today, so here we've got the breakout box here, which I'll get to in a sec. Three key levels in the marketplace. This one here, so we're looking around it. This one down at 14.13 and then down at 14.08. So these ones around here, there wasn't actually any real setups around 1413 or 1408, but using them and watching how the market reacts, so you can see the market's reacted, to within a couple of ticks of this area here, and then to the tick to this area here. So that really confirms that the key level is correct, and then can put a lot more emphasis or confidence on them moving on in further days. As far as this down move here, so I'm looking at this down move as it starts approaching the lows. This is where I looked at it and started thinking, okay, what is it about my strategy and why wasn't I able to pick up an opportunity where there was quite a decent sell-off and it looked like it was coming. I was sitting there watching it going, I just believe the market was going down to lows, but I'm just not going to jump in anywhere, and I'm just waiting for my actual setup that I've set to trigger. So this particular case, a couple of things. Normally, there'd be key levels through this area here, just because we're right up near the highs on the dailies. I'm finding there's not as many key levels, so when we're dealing up around near the highs, there's not as much of a reaction, so therefore key levels aren't really present. So key levels are actually a lot further down. I found that within the last sort of 4 or 5 days of trading, or just most trading days, there's no key levels in the range, just because of the current position we're around the market. So most cases that for me there would be a key level here, but even if there was a key level here, the market didn't really come back at any stage of it. But I guess if there was key levels, the markets do tend to react, and it just happens so often. So for that reason, no key level there, no trade. The other one is mean reversion. So where the market basically set up for coming back into the range. So this particular one just came like around here where it started to pop back up here. So what I need to do is predict it come up, then come down, or even get maybe some sort of an area where it try to go to the highs a bit more, then come down. Then I know I would have had a reversal or directional trade set up. So I think more times than not, I'm definitely going to get a setup there when it comes back like that. Just this particular case, it just went one direction quite quickly. So I just wanted to review that particular trend. Go, okay, am I doing everything possible to get on board? I think yes, absolutely. You can't be part of everything, and you've got to put a lid on it as far as how many things you look at. And for me, I was able to review this and go, okay, I see exactly why I wasn't able to get a trade within this area. So in saying that, right at the beginning of the day here, looking for my directional breakout move, so looking to pick the first movement of the day and get on board with that. So when this area started pushing up here, so you can see it's got straight out of the breakout box by 4 ticks, which is what I look for. Then look for it to come back, use this as support, and buy and go higher. But of course, other markets, I need other market support, and one big area that didn't have was the Dow Jones here. So you can see Dow Jones just didn't have that push up, just couldn't get above that pre-market area, and was just putting a lot of pressure on the downside. And as this market's coming back to what should be a support level, I'm looking over and seeing the Dow Jones coming back and putting pressure on its lows. So a very easy one there to say, not going to take it there. Comes back into the range. Like I said, if it fakes one way and goes down, or comes back in the range and goes again, that's the second movements like that really like. So when it pushed up through here and went 4 ticks straight away, putting the order on, looking for it to come back and then buy off the support. Obviously today it just didn't come anywhere near. It just went without me. But you can see, with the Dow Jones and all the other markets were the same. Now it all of a sudden changed its tune, and by the time the ES was breaking back up through that breakout box, the Dow Jones now was well and truly on board. All the other markets were there, so that's when the probability really starts to increase, and I'm more than happy to put the order on and go for it. But unfortunately, just no particular entry there. The thing about this, and it's something I am reviewing, and if I do keep an eye on how many trades I miss, especially the ones that come within a tick or flash on the order, which I had today. Just looking at other ways to potentially enter and not miss the opportunity. I know with this type of trade, and a lot of my type of trades, I'm sitting there and waiting on limit orders, meaning the market needs to go, show that it wants to move, and then come back to where I'm sitting on order. Now, quite often with limit orders, the market comes back, even hits it, but you just don't get a fill. So if you're just sitting there always waiting on limit orders, just got to be careful, because what's going to happen is you can potentially miss a lot of trades, and then of course if it does go against you, it's going to go through your limit order, fill you, and you're not going and stop you out, and you're not going to miss any stops. Meaning, if it's going to be a stop out, you're going to get all of those. If it's potential to be a winner, you could potentially miss quite a few. It's obviously something I've got to keep an eye on with limit orders, and I've spoken about that before. And this is something I really want to sort of address with this particular area. If the market's going to move, I want to make sure, and it's the area I like. For example, this particular area I really liked. I need something that's going to get me in 9 out of 10 times. So something potentially looking at is when it makes a little bit of a swing high like this, a bit like my reversal trade where if I see all the other markets pushing through, example, when the market was coming here, the Dow Jones, the Russell, Nasdaq, every single one of them was already well and truly past the entry. Okay, so I could look at putting an order on there because I couldn't get it there, have it there, wait there. If it doesn't come back, as it's coming back to these highs here, go put in basically a stop order like a power play where it goes straight through. Anyway, it's something to review. It's not something I'm doing yet, but as I'm recording information, recording data, I'm seeing sort of conversion rates of areas I like to whether they actually come to fruition through a trade. And obviously, if I'm starting to miss a few areas, then I've got to look at dealing with that. And that all comes about from collecting data, and it's definitely something worth doing with all the trades as far as how many you get, how many you miss, how far it went. I'm always recording exactly how far a potential trade goes as well, so I can look at getting my exits and my profitability in the best spots. So from there, this market's gone up higher. I talk about this area here. What I needed for a directional trade is just for the predictive average to pop up, then pop down without making a higher high, and I would have seen all the other markets breaking, and that would have given my entry. A reversal, what I want to see again is some sort of buy order or setup. So where it looks like it wants to basically like a breakout trade, but then that particular area doesn't set up, and then take it the reversal of that where it breaks a pivot point. So if the market had popped up here, created a bit of a pivot here, that I can then see all the other markets breaking and sell from basically this point down. But for me to get any opportunity, I really need the predictive to show a bit more movement back to the upside. It's happened way too quickly. And if I just decided that using this as a pivot point, it's just too small. What's going to happen many times, it'll come down, break it by a tick or two, then find some sort of support, then come up, then go down and break. So even though it looks like a missed opportunity for me, it's about waiting till the time's right. And this particular one, it just didn't happen. But more times than not, it will pop back a bit more and then go. So I'm happy with that particular area. Coming down, the market came to the lows, came to this key level 14.17. You can see the market with respect to the 14.17 in the pre-market as well. So as we start dealing around here, so when the market pops up like this, predictive, there's a couple of things: either wait for it to pull right back, or if it starts to look like it wants to head back down, and all other markets are showing like they want to go, then I'll look at the breakout trades or break on the sell side. So this particular example, all the markets were hanging at its lows and breaking its lows, so there's definitely market support there. What I do is I flick to the 1 minute chart. Let me do something here. So I've just got up the 1 minute chart here, so just back to 5 minute chart. So where am I? So okay, so as soon as this market starts pulling back like this and showing signs of holding, so around the 12.45 region, looking for some sort of information showing me that the market wants to break down. Okay, so first of all, looking at all the other markets, showing that they're looking the same on the downside or if not better. Okay, that there's no one getting a bounce. So there's a big difference between this, what I saw is this area here, and this area here, which I'll go through the two. Yeah. But this area here, looking for the markets to confirm the downside, which they're doing. Then going over to the 1 minute chart. So here's this 12.45 region here. Okay, so what I'm just going back and looking for a price, and for me, it's just got to stand out immediately. It's not like I've got to sit there and search for it. I've just got to, bring up the chart and go, boom, there it is straight away. And 14.1750 is that price. It is also that key level at 14.17 as well. But you can see the market just deals around. Like if I take it away, it's just dealing around that price there. There's just a distinct line of where the market keeps going and dealing around it. It's holding. It's never been able to really get through it. As soon as it shows power through that area, and power is at least 4 ticks, and then come back, use it as resistance to push lower from. So when I see the power through, put the order on, look for it to pick me up, and then go lower. So this particular one here, the order's just sitting, like once I saw this move here, the order's sitting here, so you can see a couple of times it's come within 1 tick, and then it's gone without me. So again, it's sort of back to the beginning of the day, talking about, again, this is a trading area where I sit on a limit order, meaning it's almost got to go not to the order, to the tick, but almost sometimes through by 1 tick to pick up because it's a limit order. And I just know that a few times missed it. Again, record it, and once it starts happening too much, you've got to really look at ways of changing that. Maybe once it comes within 1 tick, or as soon as it gets there, pressing sell at market or something like that, it will mean maybe a couple more stop outs because I'm all of a sudden giving a tick or two away in the entry. But then got to look at it as all these potential 10 plus tick moves that I miss out on. Something like this, when they think about breakout trades, if they really keep on going, there's an opportunity to go to the next level in the marketplace. So quite often these break trades can have quite a bit of R potential behind them, or quite a bit of profit within them. So that was the breakout trade here. Pushing down a bit lower, I've got an arrow indicating here what I was looking at. Wasn't actually looking at the breakout trade. So even though this has gone lower, and we spoke about this in the trading room, this is gone lower. But again, looking at other markets, I wasn't prepared to take a breakout trade because what I was seeing was the Dow Jones, I think it was. Let me just find it. The Dow Jones. Sorry, not the Dow Jones, the Nasdaq. Yeah, the Nasdaq. So here it is. Here, so basically, just on the ES for a second, the market came down, popped up like this, and this is where potentially I can look for breakout trades in these areas here. What I was seeing, look when I got my cursor there, look where the Nasdaq is. See how it's coming up, it's come down, it's pushed high, it's making higher highs, it's breaking through pivotal areas. So I've marked this as a pivot area. So the Nasdaq had already pushed back up and was getting above this area. So what I was doing is marking this, and why I've got this marked is a potential reversal trade. It's never really come close. What I need is all the other markets to be pushing through it, but it shows signs of mean reversion that was going to come back within the trend. So bouncing off a key level, showing reversal signs, not making a lower low, all the other markets breaking out through this pivot, and then actually buying. So that never eventuated. Other markets weren't interested. But on the same side, the breakout trade, seeing what was happening with the Nasdaq, clearly there's no support whatsoever there for me with the Nasdaq. So just straight away cancel out, looking for a breakout opportunity. Whereas here's the previous area. You can see it keeps coming back at its lows, and it's not getting a massive bounce up. It's not putting any pressure on its previous little high points or swing high areas. Everything's on the downside. So there's real market support there. So that's what I interpret it as market support. This area here, fantastic. All the other markets are going and really looking to put some pressure. This one here, it was a mixed bag. Some markets were getting a bounce, some were pushing through. But for that reason, I was more interested in the reversal. Never came, but also not looking at the breakout just because there just was too much evidence against the area, even though it's worked. But that's just the way that I approach the area. And so then, like I said, at the top of the session, 14.13, again respecting that level, and then right at the end of the day, not looking to trade on this area. There's nothing really setting up as far as this area was concerned, but it's great to see it bounce and really confirm that area there. Only other couple of areas I would have looked at which never eventuated is once this market starts pushing down like this, popping right back up, and then coming back and using this key level as some sort of either sell, 5-minute sell, or 5-minute fade, as in my 5-minute continuation is my version of the 5-minute sell, or if it actually gets back up and gets some power through it and the moving average swings back to the upside, then obviously the trend or directions change back to the upside. Use it as a key level or an area to bounce and push higher from, and that's the 5-minute fade, or my version of that is what I call 5-minute momentum. Basically taking the 5-minute fade concept or the 5-minute sell concept, but not using an indicator to get an entry, using a key level in the marketplace to get entry, and that's the only real difference. So quite often can make sometimes the trade gets entered in very similar spots, sometimes they get entered in quite different spots, and sometimes same time frame, and sometimes quite different time frame as well. But for me, it comes back to personality and what suits your way of trading, and that's for me the way I feel confident in doing it. But at the end of the day, it doesn't really matter which way you approach it, as long as you keep on doing it the same way and make it systematic and consistently do it throughout the year. Then that's and you create a risk model around that, you create parameters around that, then that's what's going to eventuate into profit. Righto, so that's Tuesday. Obviously no trades for the day, a couple of close calls, and then be back Wednesday. Cheers.